Is spotting the trade. We're going to get you what you need to know before you roll, and that's going to start off with talking about some economic data, see how that impacts the overall markets, maybe sprinkling a little geopolitical fodder there to round off that analysis, and then talk about some option strategies we could implement into our portfolio based on these assumptions we'll come up with in these market analysis. All right, so without further ado, let's get on with some economic data. Yesterday, last few weeks actually, even heading up to the FOMC meeting right around the corner here, we're going to talk about some economic data that we already seen. Now, PMI, Purchasing Managers Index, look pretty good. We're seeing the manufacturing sector continue to do well. Although yesterday, I think we got the Richmond Fed manufacturing, which was one of the first ones that we've seen that kind of came off just a little bit. But one of the other things that we're continuing to see is this manufacturing not really slowing down. And we're seeing inventories build. That's not something a company wants to see right now in this, let's start this quarter of the year, okay? This is not usually a time where they're really ramping up on inventory. That's usually heading into the holiday seasons, maybe into the summer, into the fall. That's when we start seeing that happen. So with these folks, with these folks having this happen, we are going to see some prices probably come off a little bit.
Good morning, Eric. The time is 5:30 a.m.
It's 5:30,
Currently
folks.
in Litchfield Park.
Here we go. This is live stuff.
Clear. Today, it'll be sunny
and
with a
you get to watch me
forecasted
try
high
and
of 90
figure out
and a low
my
of 58.
phone. There we go.
From Reuters TV, U.S. at 5:24. Have
All
a
right,
great
folks.
day. For AM today.
Thanks. Please stop talking.
Here's the latest news. From
There we go. Jeez. That's hard. Sorry, folks. Anyway, sorry to put you through that. Let's get back to the economic data. There. All right. Forgot about my alarm going off. All right. Preliminary wholesale inventories increases 2.3%, expected to be 1.5. So this is what we're talking about with these higher inventories. Now, what I see happening is these folks are going to have to move this. So they might have to lower a little bit of prices here. That's going to pinch them in the margins because they're paying higher prices for everything from gas and metals that go into any type of manufacturing process, including crude oil, which is a major demand driver. Crude oil actually manufactures a main demand driver of crude oil, I should say. That actually increased just slightly to 700 million barrel build, expected to be about a million barrel drawdown. So increasing inventories there should give a little bit of downside pressure here to, let's say, crude oil. Flip over to crude oil real quick, get through the charts. Let's just get on with the markets here. We've got crude oil bumping up against this 50-day simple moving average here. That is going to act as resistance. You can see the last three times, usually we say third time through, excuse me, but this third time through is not looking too keen because the candles are stacking up with these dojis here. Now, it's usually at the top of a move that I like to trade off of these, but I'm watching this really start to lose a little bit of momentum. So are we going to lose that $100 a barrel finally? That's what I'm looking for. I'd like to see crude oil break down and inside of this value area. I want to see lower cost across the board for folks like you and I, because the fear here is higher prices. Increasing interest rates to try and counteract that would slow the economy and put us into a recession. Last thing we want to really see is the slowing economy and inflation continuing to rise. That's a situation the Fed can't back themselves out of. So lower prices coming from things like crude oil will really help across the board, but we're not really seeing that right now. Just continuing to see the turmoil across the board in equities and everybody talking about that. Higher interest rates probably not going to be around the corner anytime soon. No, they are. 50 basis points next meeting, folks. That's why we can't see the bonds or any of the interest rates start to rally here, because of that thought process that if they increase interest rates, we've talked about this many times before. Let's just go back to this because I'm getting ready to talk about it, I guess. Interest rates, when we're talking about this, when these prices, if we're talking about price over here, right, and we're talking about rates, that's what we usually hear about with the economy right now. Well, what are we seeing right now is the price is going down, and it's a teeter-totter effect, which means interest rates are going up. All right, that is inversely related. So if you see a bond price start to spike here, especially within the next 6 to 8 months, that would be the time to sell into that with like something like covered calls is what I would be looking at. And yeah, you can't directly do a covered call against the bond in your portfolio. But what we do is we talk about other things like ETFs that we can use to simulate that covered call, because you have the bonds already. So you can do the covered call against something that is correlated that way. So that's what we're looking to do in something like the bonds there. Give me back my pen. And then let's go over to gold futures. I'm really surprised with inflation that the strength in the dollar is counteracting this gold. Now, I was expecting gold to continue to stay higher, even higher than the financial crisis high in gold here. That's what we're lining up there with that 1923. We've broken down below that now. It seems like we're finding a little bit of a bottom here, but this looks very eerily similar to what we're seeing in the equities. And I've been talking about that with these dead cat bounces that we've been getting. And this, I don't think, is going to be a dead cat bounce, because the equities are looking a little weak. And I think that folks are going to have their hands forced into buying something like gold, because that is going to be the retainer of value. All right, Bitcoin really not going anywhere. It's falling out of limelight. As a matter of fact, NVIDIA not looking too good these days. We did a video on NVIDIA on short calls, folks, in the webinar when I was talking about how to build the short call strategy and when and where to set those up. Well, that trade worked out quite nicely. I was just looking at that stuff because I'm preparing for a webinar for this afternoon, guys, and it's on the short call spread. Great type of trade for this type of environment, right? We can do a limited risk strategy, take advantage of high volatility. I'm going to break that all down in Cracking the Code to Trading Options this afternoon. So please check that out. Oh, if you subscribe, make sure you hit the bell, because that's when I come in unannounced. You'll get a notification. Or if you're just not necessarily paying attention, forget about it. You'll be notified. All right, onto the equities. Breaking down below the value area lows here. Now, we were talking about heading into yesterday. I said, do not jump on the setup candles anymore. This is something that I, in the past, have jumped on when we get basically a bottoming pattern with a candle, looking similar to this, or it could be in green, which is very similar to what we got. It was a little bit longer candle on the top there. Looking at this one right there, somewhat similar to that, actually more similar to one of these, maybe even a little bit longer one, right? But that is more of a bottoming pattern. Now, previous day, we were talking about that. These are like the dead cat bounces that we're getting. You have to wait for confirmation candle on the upside there. And what we got, in fact, was a breakdown here, breaking that whole pattern. Now we've got another one setting up with a confirmation type candle, looking like we're getting a confirmation candle here. But again, it would need to finish near this top in order for that to be a real confirmation of a reversal here. But I don't see that really happening. I think that we're going to see another leg down, and this is the line in the sand we're looking for there. 32,300, something I was talking about yesterday. I think that's still intact there. NASDAQ, I thought we were going to go down there and test the 12,500. We didn't quite get there, but I don't think it's over yet. I think it is a line that we are going to have to cross. You can see this lines up with the previous highs there. So that is a target that the market is going to be keeping an eye on. So I think that is almost a sure thing here in the next week or so. So keep your eyes out for that kind of location. That's when we're going to be looking to start selling some puts. As a matter of fact, this could line up quite perfectly for next week, when I'm going to start going into talking about how we sell puts, when, where, and why we would do that. So hopefully we can start seeing a market turnaround by then, and then we can start implementing our short put strategies, right? Right now, we're in the short calls, taking advantage of this pullback here. All right, E-mini S&Ps overnight, pretty strong, but I'm telling you folks, I think we're going to see some weakness here throughout the day, and really setting up for a Friday, which is usually where we start to see some negative pressure. Now, during this last couple of weeks, we've actually seen that trend get bunked a little bit, but usually when we're seeing this type of volatility, this type of geopolitical turmoil going on around the world, folks don't really want to hold equities over the weekend when they can't really do anything about it. So you will see some selling pressure happen on Fridays, usually, especially in an environment where we've been in a negative trend here, which is what we have been seeing in equities. Now, something I wanted to talk about is Meta or Facebook. They came out with better than expected earnings. They have been sliding with all of the things that have been going on in the world and talking about, their headwinds and everything else. Well, they came out with better than expected earnings, but one of the key things I think folks are going to be focusing on with this stock is the fact that Zuckerberg was talking about pulling back on some of this investment in Meta and driving that space. That signals that he is not seeing the folks really adopt that type of Meta, or what his focus was, is not really being picked up by folks like you and I. So I think he's pulling back on that, at least for the interim. All right, so I wanted to do something what I usually do throughout the day is I set up my watch list here. I have my implied volatility percent over here on the side, but I have it set up for 6 months. Usually when you're looking out throughout the platform, you'll see it implied volatility. That's based on a full year. Since we've been seeing this type of volatility fluctuation, I'm going to go back only 6 months to kind of get that snapshot of the environment we're in and going forward, because the paradigm has shifted just a little bit higher across the board in all equities. So we have to take that into account. We can see that I've used this as a volatility indicator, that this has been a previous high and that this is something that has been range bound within this area, but something we're going to have to note. I did not really see this happening, is the pandemic high coming back into the play this soon. I was expecting this to be more of a black swan event here, where it was a data point that we'd probably need to keep an eye on, or at least know about, have in the back of our mind that would be a level that we might find again. I thought it might be 5 years down the road, not just 2-3 years down the road. But here we are right there at those levels. This golden line I'm going to leave in there, and may it just extend out in time, because that is, I believe, going to be the golden top, if you will, if it ever breaks out of its normal range from the past several years. We can see that might be the place where the topping is happening. So I wanted to throw that in there because that correlates back to what we're talking about today in the videos, in the webinars where I'm talking about cracking the code to trading options. This is something that we really focus in on because it gives us the best indication as to how much we're paying for options. Are we paying through the nose for it? Is it super expensive or super cheap? Well, we don't know that unless we can chart or focus in on what volatility is doing to those premiums. And I show you how to do that in this video here this afternoon. So please check that out. Don't forget to hit the subscribe button and the like. All right. So Facebook falling out. So what I have a tendency to do is in the mornings, I'll flip through the charts here to try and, I'm going to pull this over just a little bit so you can see everything. Flip through the charts. This is a 3 year. So let's go back to the 1 year and start flipping through some charts and see if we can find something. XLU, really, utilities, surprising that they're selling off in this type of environment. One thing that I would stay away from really right now is the travel and leisure. I think banking, although it's been getting beat up here, banking is going to do well as interest rates rise. That allows them to create more margin when they're giving loans. Think about it. When loans are at a 0.25%, there's not a whole lot of wiggle room there. But when interest rates are at 2%, well, you could go to one financial institution, see interest rate, maybe they'll loan you something for 2.25 or something like that, but somebody else is saying 2.75. Well, that's a 50 basis point scalp there that one person's getting versus another. You can't really do that in this environment. Think about it. When you're comparing maybe mortgage rates and things like that, you were getting an eighth of a percentage points difference. That going forward, we could start seeing that spread really wide, and you're going to have to shop a little bit more to find those deals. All right. Little bit of a tangent, but hey, Deere, I don't know if I'd invest in it right now because Caterpillar is looking pretty ugly as of recently. We thought we were getting a bottoming pattern in Caterpillar. I was looking for this as a trade for a bullish move, but no, yesterday we got the eraser of that bottoming pattern. This is the eraser, if you will, and another trying to fight back, stay above this 50-day simple moving average. But again, very sloppy with these volatilities that we're seeing, and the market's just really not setting up like or acting like we would normally expect. So I'm going to stay away on something like applied materials. Looks like it's a bottoming area. Has been the 52-week low, right? That seems like a good place to buy it. They do have earnings right around the corner with high volatility. But again, I would, in a situation like this, have to wait for the markets to, let's see, do I have it on there? To confirm. I need it to trade above the previous day's high and settle there before I'm going to get involved in a trade around any type of setup. So normally this would be something very interesting to me, and I would probably be talking about adding short puts for something like this. But again, in this environment, the trend is negative right now. These bottoming patterns aren't holding a whole lot of weight here. So it's more of a line in the sand than anything else. So just flipping through the charts again, Disney getting beat up, all the turmoil around them. It's funny that folks like Texas are like, hey, Disney, you can move Orlando to Texas. Can you imagine them trying to move that entire place? Anyway, it's funny when people start talking like that. Booking.com, I don't know. Travel and leisure, I think, is going to really start picking up this summer. I think folks are really kind of frustrated with not being able to travel. Are they going to hit the roads in their cars? Well, probably, because gas prices are going to be probably elevated as well, which means that airlines are probably going to be expensive. So going to be very difficult for that. Target really starting to slide here. One of the things that I want to talk about is, trends that we've been seeing. Lulu, one of the things that I was jumping on with Lulu at the pandemic was like, everybody is going to be wearing Lulu clothes, or at least the yoga pants and things like that. But folks, yoga pants are kind of out right now, and everybody is going to like sweatpants and stuff like that. That's kind of where the trend is in fashion, moving away from that yoga and back to sweatpants. So how is Lulu going to do going forward? We've got a bottoming pattern here, but again, I would not be jumping on board with this bottoming pattern. I would need to see a confirmation. And as of right now, what are we getting? Well, we've been getting these types of patterns, and then the red candle erasing that setup. So again, they're going to need to wait and find opportunities that are confirmed. Don't start jumping on these things a little bit early. It's just too messy right now with the volatility. Stay away from that kind of thing. All right, folks, that's all I got. Today, this afternoon, we're going to be talking about one of these trades where we could do a short call spread in here, and I'm going to show you how to set that up. We'll talk all the way down to the strike location that you need to start looking at to focus on putting these trades on in order to get your risk reward in line. All right. So we'll talk about all those things this afternoon. So please make sure you guys are subscribing with the bell, because that gives you the indication. Like it, and don't forget to comment. I will circle back around, make sure everybody's clear of concept. So thank you guys very much. And if you can't take that, take it easy.